Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, the next iron ore export expansion is set for a flawless transition. A large volume of Gold Fields' gold is accessible from paid-for shafts, and accelerated mining at South Deep may back the declining South African gold trend. The expansion of South Africa's iron ore corridor to handle 60 million tonnes of iron ore a year is poised for flawless transition, says Kumba Iron Ore CEO Chris Griffith.
The port has now been expanded to be able to handle 60 million tonnes, so the port is ready to accept the expansion that we've seen that is still to come on board from the Kolomela mine and some of the expansion from Assmang. So the next tranche of expansion that's underway, under development at the mine, the port's already ready. They've been putting in the last year, putting in new locomotive and wagon capacity on the line. This is Transnet. So I think in this case, Transnet's very well aligned with industry and the next wave of expansion.
More than 50 million ounces of Gold Fields South African gold can be accessed from current paid-for infrastructure.
And that's one of the success stories we've had in our reserves, is we've managed to improve the resolution. And it's ounces above infrastructure that count, because that's going to be the stuff that you can exploit tomorrow and develop tomorrow without having to sink major infrastructure further down into the ore bodies. It's all very well having ounces below infrastructure, but the capital costs of getting there are substantial, whether it's shaft systems, decline access, etc., putting in new ventilation capacity, refrigeration capacity, you name it, water pumping arrangements and storage. All of those issues have a profound effect on the overall cost. So the good news is a lot of this is accessible from our current infrastructure.
The JSE-listed Gold Fields, South Africa's second largest gold miner, is moving to mine more gold from South Deep, which may help to back South Africa's declining role as a gold supplier.
We are looking at a feasibility study of taking South Deep to maybe up to 450,000 tonnes a year instead of 330,000 tonnes a year. And that could enable us in the long term to get this ore body further up, maybe to 1 million ounces. We're doing the study, it's early days, it'll require more investment to do that, but when you're sitting with 35 million ounces, I think we've got to try and see how we can bring a lot of that value forward.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.
For 30 years, Creamer Media's engineering news has delivered unmatched insight into South Africa's real economy. Subscribe now and go to engineeringnews.co.za for the real economy in real time. Engineering news, not just for engineers.